Welcome, everyone, to this week's discussion of Let's Talk About It. It's a bi-weekly program that's brought to you by the BNIC Network on behalf of the Closed Private Investment Network, where like-minded people come together to form community, become educated about personal finance in order to practice cooperative group economics in order to support the Black community to become self-sufficient, self-reliant, and self-determinant. So they all always are moving the controls around on me. So we're going to start first with our disclaimer. So the information provided in this discussion is strictly for educational purposes only. I strongly encourage you to consult a licensed financial advisor, attorneys, and tax professionals before making any significant financial decisions or investments. And even though I do have decades of business experience, I am not licensed or registered with any regulatory authority. And we're going to start off first with a brief 2-minute video overview of what we're going to be discussing tonight. Let me set it so that the sound plays. Here we go. Here we go.
The real barrier to building wealth? It's probably not what you think. Let's dive in. So you're working hard, you're saving, but that financial progress, it just feels stuck, right? See, most of us are chasing a higher salary. The wealthy, they're focused on getting access to great deals. Yeah, it really all boils down to one thing. Access. That's the real separator. And we're not talking about stocks. We mean exclusive stuff, like private real estate deals you never even hear about. Look, the public markets are crowded. The truly big returns, they're often in these private, exclusive deals. And this isn't random. There are actual gatekeepers, like crazy high minimum investments, to keep most people out.
Let's just be real about it. This system is built this way on purpose. It's designed to keep you out.
So you're left on the outside, without the connections or even being in the right rooms where deals happen.
It's all about who you know. These deals are passed around in tight-knit circles, not posted online. So if the whole game is rigged, how in the world do you get in? Is there even a way?
Well, you don't try to break down the door. You build a whole new one.
And here's how. You do it together. By pooling resources, a group can get past walls an individual can't. That's the power of the group. Suddenly, those high barriers get a lot lower, opening up this private world. But really, it all kicks off with a change in how you think about your place in the financial world. You've got to shift from just being a consumer, someone who only spends and saves money,
And step into the role of an owner, someone who is actually building real value. And look, this is not a solo mission. You have to connect with the community where these deals are happening.
So think about it. What's holding you back? And what would that kind of access really change for you?
It's time to get off the sidelines, stop watching, and become an active player. Your journey can start right now.
All right. And with that, we're going to jump straight into the presentation, which is access to deals, right? The real wealth barrier. So what's the real core difference between the wealthy and everyone else? Because wealth is not just about income. It is about access to quality deals. As they say, it's not how much money you make, it's how much money you keep, and then what you do with the money that you keep. So most people are structurally locked out from accessing high quality deals before they even start. So in this session, we're going to expose the exact structural barriers as well as the structural solutions to bypass them. So the anatomy of a deal. What are these deals that we're talking about the wealthy have access to? Well, There are various types. There are generally fall under the category of private placements, syndications that have cash flowing asset acquisitions, including off market real estate opportunities. But the biggest and the greatest returns are found in these early stage business investments, as is seen with those that got access to AI companies that are getting ready to go public. And unfortunately, the average person didn't have access to those early stage companies because of the barriers. So it's a tale of two markets. So first you have the public markets, right? Um, you got your stock markets, and those are saturated, highly efficient. They're accessible to anyone because they're heavily advertised, but they generate average benchmark returns versus the private deals, right? It's a distinct ecosystem where wealthy investors operate and where they live. And it's not available to everyone. It requires special access, and you got to belong to specific networks. And this is where institution and private deals constantly outperform over time, holding the highest returns. The gatekeeping mechanism. So there's basically five walls. So the first wall is information asymmetry. So the deals are never publicly listed. You're not going to be able to Google them to find them. They're network-based access, which means you've got to know somebody. You either have to know the sponsor or you got to be invited by someone who knows the sponsor. And then there's usually accreditation requirements. So the SEC has this definition for an accredited investor. It's someone who makes $200,000 a year in income for the last 2 years, or has a net worth of at least $1 million, excluding their primary residence. For a married couple, the income can be 300,000. And so you have to ask yourself, how many of us meet that definition of accredited investor? And they get access purely based on their income or their assets. It has nothing to do with whether or not they're actually, qualified and have the experience or the knowledge. And then there's wall number 4, which is the minimum investment thresholds. Most of these private deals have a minimum investment requirement of 100,000. You may find some that get that down as low as 50,000. But how many of us are sitting around with $100,000 that we can readily invest freely into these private deals? And then there's regulatory structures. So the crowdfunding act that was passed some years ago was meant to allow the average person to participate in these type of private deals that where a person used a crowdfunding platform. But there are limitations. So for any unaccredited investor, the limit is no more than 10% of your gross income, or $10,000 per year across all platforms, across all offerings. So even if you've saved up $20,000 and you want to invest it in a crowdfunding deal, if you're an unaccredited investor, you're not going to be able to do that. Then there's the individual's dilemma. Um, as an individual, most of us lack the proximity to deal flow. We're not part of that network. We don't know the sponsor, and we don't know anybody that knows the sponsor. Um, and there's a lack of education of even how to evaluate these more complex deals. And then, of course, fear and mistrust can be caused by a complete lack of exposure. So, the physics of opportunity, the key principle is that deal deals flow through relationships, not advertisements, right? Proximity creates opportunity. You may have heard of the saying that your net work is your net worth, right? The people that you know, the people that are part of your crowd, the clubs that you belong to, the societies that you're involved with, um, that is most likely how you get access to these types of deals, right? Because trusted networks inherently reduce risk while simultaneously increasing access. Um, and again, closed ecosystems historically outperform open markets. So now we're going to talk about how can we get access to these type of deals, right? We talked about the structural barriers. Now we're going to talk about the structural opportunities. And so I present to you cooperative access, breaking the vault. And this is what the Closed Private Investment Network, CPIN, is all what it's all built around. It's lowering barriers to entry through collective action. So wall number one, which is capital. So through the pooling um, of people's money, whether it's through investment clubs or pooled capital structures like special purpose vehicles, it can completely neutralize the minimum investment thresholds. So, as an example, um, the BNIC network runs a real estate investment management company that manages real estate deals on behalf of investors, but we only do it for properties in Detroit. The typical investment is fifty to $60,000. Now, again, if you don't have fifty to $60,000 as an individual, you can't participate. But through the CPIN, you're able to participate for as little as $500 by pooling your capital with other like-minded people. And to learn more about that, you would need to become a member of the Closed Private Investment Network in order to see the specifics on how that works. But that's how you break wall number one, is pooling money together. Um, Wall break number two is shared due diligence. So when you have a group, whether it's again through an investment club or through a network like the Closed Private Investment Network, um, you're able to collectively look at investments from different angles. And each one of us brings something unique. And so that shared due diligence, it distributes the risk and it overcomes information asymmetry because now you get to share that information, and information isn't just hoarded. So let's talk about the evolution of an investor. So last week we talked about shifting, or 2 weeks ago, we talked about the shifting of mindset from being a consumer to being one that spends with a mindset of ownership, right? So that's step number one, is just a mindset shift. And then step number two is intentionality. So once you make a decision that um, hey, I want to have financial independence. I want to practice cooperative group economics. Now you got to be intentional about it. And so the CPIN has several tools that help you determine what your financial independence number is, how much income producing assets do you need to accumulate, and then create an asset accumulation plan based on how much money do you need to invest each year, how many years do you need to invest, and what rate of return do you need to get on average per year in order to reach that amount. And then we also have a financial planner tool that helps you take that plan and put it into action. Helps you look at what your budget is, your debt and paying off your debt, creating an emergency fund, because those are the first two things that you need to do. Have an emergency fund, pay off debt, and then shift to investing. But you got to be intentional about it. So CPIN gives you the tools to be intentional. The third is ecosystem integration, where you plug directly into environments and networks that organically generate deal flow. And so that's what CPIN is. So we bring a group of like-minded people. That's the first pillar, community. We provide educational courses so that you can make better financial decisions. That's the knowledge center. That's the second pillar, which is education. And then we have curated investment opportunities. These are opportunities that we have gone through, we've evaluated, we've identified the risk and the rewards, and then we put it in a format so that you can compare one investment opportunity to another investment opportunity. And so in CPIN, that under the investments section, now to take advantage of investments through the closed private investment network, you have to be either an accredited investor or a sophisticated investor. A sophisticated investor, as defined by the SEC, is someone who, through education or experience, understands the risk associated with an investment. So we're able to turn an unaccredited investor into a sophisticated investor through a set of courses that we offer for free through our Knowledge Center. There's a quiz that you have to pass at the end. You got to get at least 70%. That's how we prove that you understand the knowledge that was presented to you. And then we classify you as a sophisticated investor. And then you have full access to the investment opportunities. And then step 4 is skill acquisition. So by coming to these types of educational presentations, by taking the courses in the Knowledge Center, and by investing in the different investment opportunities, you hone your skills so that you can get better and better at investing. So, what's your next move? Where are you currently getting your deal flow from? And which structural barrier is stopping you right now? And what would it take for you to gain access? So I encourage anyone who's not a member to join the closed private investment ecosystem. I will put a link in the chat and stop speculating and start participating actively in the private deal market. And that is the end of the presentation. I am putting in the chat the link to preview the closed private investment network if you're not already a member. And with that, let's open up the discussion part. What did you guys think of the presentation? Are you guys involved with any other networks that give you guys access to early investment opportunities in private companies? Um, and what do you think of the concept of pulling our money together in order to overcome those barriers?
Hey, Mike, I'll provide some feedback. Yeah, I actually, first of all, great presentation, timely topic relevant to me. Um, I do belong to a couple of groups in addition to CPM. One group is called Hack the Concrete, and I got involved with that group because I was in a room. Um, that room ended up being the right room because I made that relationship. And then the guy who stood up to Hack the Concrete ecosystem, um, uh, I could be in Los Angeles today pitching the No Backboard Basketball League as a result of being part of that ecosystem and gaining access to a pitch event. But because of being part of this community, I got connected with Tim Ollie, and him and his uh, tech guy supported me in going to Vegas this past weekend. Well, I just got back from Vegas to be in a room of sports, tech, and innovation type people. Um, so I'm in that room, significant, great conversations, et cetera. And I got access to high level, powerful people in sports and tech that I would never have gotten access to being outside of the room because I'm in the room and they're in the mode to meet and communicate. I was able to make those type of contacts, and I present myself well and our opportunity well. So I'm walking out of that room with 20 conversations to follow up with. But what made that really powerful and empowered me was the result of being involved with this room and then taking some tools that Tim Holly made available to be able to go to Vegas, get into another room, and then leverage this room in that room to now move the project forward. And then last thing I would say in landing the plane is there's one guy I met early. Uh, Let me see. I jumped back on this joke in 2022. And that's what he said, you gotta be in the room, you gotta be in the room, you gotta be in the room. And even some of the like business podcasts I hear, and these are very wealthy guys that invest in businesses, and they throw 25,000, 50,000 around on a seed project with no problem. But these are the people that are getting access to that are part of their network. And that's why the money comes easier to them. So 10 years from now, hopefully CPIN's at the level that there's so much money running around, so much trust that a good idea can overnight get 100,000 into it. And when we get to that point, now we have a room that really can make some powerful moves. So a great presentation, and I land my plane.
Thanks a lot, Mark. Um, yeah, so Mark showed the example of being in one room leading to access to other rooms. And again, your network is your net worth, right? But it takes you being active. It takes you putting yourself out there, um, and being an active participant in rooms. Um, Go ahead, Greg. Greg, go ahead. Unmute.
Can you hear me?
Yep, we can hear you now.
Yes, sir. Yes, great presentation, Michael. Definitely very informative, and I just love the way that you teach and the way that you are able to first and foremost engage with everybody because everybody's coming from a different level of investing on these meetings and people that you're meeting and introducing this whole new aspect of CPEN too. So I just wanted to say that, preface what I want to say first with saying that. But yeah, I talk about this a lot with people every day, young Black people, more mature Black people specifically, about investing, but also learning the craft of investing and having an understanding of, you know, risk versus reward and the different types of investments. Most people hear about stocks and bonds, but very few people understand, venture capital, angel investing, um, investing in real estate through fractional ownership. A lot of day-to-day people, they don't hear about that, as much. But this is very powerful what you're doing, not only the presentation, but just this whole network in itself to be able to allow, blue collar America people to get into some of these securities that, number one, they may have never thought they would be able to, and also just giving them a real chance and real motivation to expand their palette and take the time out, each day or each week to study on their own different securities and different opportunities, whether it's regulation, crowdfunding, or what have you. So it's amazing. But yeah, I talk to young people about this, learning to invest, and the economy that we're living in now, it's vital. You've said it multiple times. The multiple streams of income is key to long-term wealth. But also, we hear people every day in America complaining about economics and complaining about, the government that we live under, the thumb that we live under, so to speak. But it's up to us, especially in our community. It's up to us to be able to break bread together. I think that's one of the things, the major bullet points I wanted to say is just us being able to talk to each other. Like you said, not gatekeeping, not trying to make all the money ourselves and just hoard it. Like each one teach one is a real thing. So I try to spread the knowledge to a lot of people that I see on a daily basis in my everyday life. I don't try to lecture people, but I just try to kind of, give them the knowledge and keep everything in context. But this is very important and it's vital that we share this and that we are able to kind of break bread with one another like the other groups do, because I see it on a daily basis in my city and in my surrounding cities. I see other groups of people that aren't like us breaking bread daily, discussing business daily, whether it be in the English language or in some of the other Eurocentric languages. So this is vital, and I'm just thankful to be a part of it. And yeah, no, this is major. So thank you.
And thank you, Greg, for being here. Greg is actually one of the early investors in our real estate project, in which he was able to become a fractional owner in our first real estate project in Detroit. And he's receiving quarterly payouts. And what's Greg, it's been what, a little bit over a year now, I think, that you've been invested through us.
Yeah, it's been about that. Yeah, it's been about a year. For those that are interested that have watched this presentation or previous presentations, yes, I am an active investor. Yes, the quarterly payments have come through on time. And also, Michael, one thing, probably one of the best things that I like about him is he's very available. He's not like, any of these celebrities where, you can't get in touch with them, or, you got to go through 9 people to get in touch. Like Michael is very available. He's not hard to find for a reason. So access to Michael to answer your questions, even if you have questions after this presentation and you have a question at 2:30 in the afternoon on a random day, he's there to reply. So no question is a dumb question, especially for people that are new to investing. Um, Better to ask and to know than just to stay in the dark. So Michael's very readily available to answer questions, and like I said, he's able to break it down and digest it for people who've been investing for 30 years and people who've been investing for 3 months. So he's good that way, and I have no complaints. I'm happy, like I said, to grow with the project, and I look forward to some more real estate investments and things as such in the Detroit area and some other locations that I'm sure Michael has in the back of his head. So for those that are listening, definitely, like I said, each one teach one, ask your questions, and let's just grow. Let's grow together and mean it.
Thank you, Greg. Thank you very much. Um, Tim, Leroy, anything that you guys want to add to the discussion?
Yes.
Go ahead.
I have been on almost every call with CPIN for the last year and a half or two, and I have grown. I have gone into what I call the back room area and have taken the courses that have led to becoming a sophisticated investor. Have look back in the back room area at some of the things that you're doing. But one of the things that I have not done, which I appreciate Greg and what he just shared, is that I have not moved to the next level of active participation in one of them, but in one of those particular avenues. But I am happy to be in the room where information is being shared, education is advancing, and where I do see opportunities. I have made the mistake in the past of seeing things thrown in my face, and I guess I went in the wrong door where the intention of the owners or whatever was not in my best interest. But I have, as I've listened very closely to CPIN and have talked with you, Michael. It is true what Greg has said, that you're easy to talk with. And I leave with a sense of having a clear understanding based upon all of the studies that I've done over the number of years of comfort level and trust. Uh, and so where I see CPIN right now is building the network. And I think that's what you have said. Building the network with entities of like-minded people who are ready to move forward with intention. And so I see that's where I am right now. Thank you for the information.
All right. And thank you, Leroy, for definitely um, being one of the consistent attendants to the Let's Talk About It discussions. Um, Tim, you got anything that you want to add?
Well, I have to tell you, I don't like looking at the private deals. Uh, and the reason being is that the information for your due diligence is narrow. Uh, Now, whether it's a public company or a private company, um, as I learned at Harvard B School, it's management, 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 market, market. Those are the elements. Wherever they are, it doesn't matter. Management, 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 market, market. So there are opportunities out there. I don't know. I've looked at a lot of private companies over the years, but I still prefer public because the information flow is there. Now, for us, how we get deals, man, let's just come straight with it. We not white, okay? And you not rich. So let's get real. If you're rich and you white and you male, you might get a shot. Because every guy out here is looking for the next deal and they're all looking at the same deals. so, even every investment bank I know is trying to, it's like they're all trying to pee with a big dog peed. Every investment bank I know, and they don't want a deal. They don't take a deal in. A deal is no good unless they source it. So you're right. Private deals are great. They can make a great opportunity. Um, you have to really structure them so that you got to be concerned about your return on investment and how it's going to do. Exit strategy, exit strategy, exit strategy. Okay, and talking about going public, come on, there are 15,000, I think at least 15, 20,000 public companies. How many of them are headed by an African American? not 100, not even 100, right? So, I mean, and if we have them, we don't see them. So not even 100. So we're really it's a tough game, and the cooperative economics is our solution. But I don't know. You're doing the best job I know how to do. So God bless you, and the brothers and sisters here. We all trying to figure it out because it's a tough thing. But still, I prefer public companies. I believe in takeovers. I think we got enough money. It takes if you have $50,000, you can take over a company because if your concept and idea is correct for the takeover and how much you're going to do with the takeover when you get it, if it's going to generate that much more money, institutional investors can now pay attention to it and say, we're going to go along with that because we're here for money. They're not here to jump in and out, but they're here for the money. So you can take it over. What's the 50,000 for? Lawyers, auditors. Well, more for your lawyers. So if you have your lawyers, you can take it over. I've taken over companies with no money. So and I'm and I was going after one recently, and I talked to a source of money about $400 million, blah blah blah. And then I stopped and I said, "Wait a minute, there's a way to take this over without any money." He didn't like it, but I saw it. It'll take time, but it can be done without any money. So anyway, that's my preference as a public company because you have the information. It's out there. Even some of that information is incorrect. Private companies are good, but getting access to it is really really hard. We don't play golf with them. We're not at the bank for them. Um, we don't go to their churches. They don't look like us. We don't look like them. The deals that are for us, you know the problem. The people in charge of those deals qualified, and are they qualified? I mean, let's be honest about it. You don't want to just somebody. What they tell me when I was doing venture capital, deals are like feet. Everybody's got 'em, most of them stink. So so what are you going to do with our people when we go to look for a deal? It make sense. And every deal, everything I know that black folks really know about is you guys hitting on it. Real estate, real estate, real estate. Ooh, that's boring. Okay, now it makes money, and they ain't making no more land and all that good stuff, but it's boring as heck, and and real estate doesn't come up with returns like AI. Okay, it doesn't come up with other returns. So uh, I don't want to sound like a Debbie Downer, but I really do believe in the due diligence is critical and management is critical. And so if you can get past these things and figure out, remember in every company is that four-letter word, RISK. So how do you do it? I mean, I would, uh, even in, even when I was managing money, big Arab money, way back in the day, if I looked at a private company deal, let's say it needed $50 million. Okay, so I would go out and I would take if the 10-year Treasury had a yield of 7.1 percent. I would go out and buy a 10-year Treasury for $100 million face amount. This would be a Treasury, strip Treasury, and I would buy the face amount for 100 million, but it would only cost me 50, and I take the other 50 and put it in the project. And I did that so that if something goes wrong, I'm gonna get my principal back in 10 years, no matter what happens. So I would overfund myself so I can make sure that there's no way possible we could ever lose the money. You might lose opportunity costs, meaning, because you put your money there, but at the same time, we never lost a dime. Let me tell you, it worked. It was a kind of fund and it worked, and I did it over and over and over again. And that's how I wound up with a whole lot of Arab money because I never lost their money. All they did was make. So if you get a venture capital situation in a private company that has a 50% return on investment, so that means 50% return on investment, your total return, your return really is now 25%, not 50, because you got to worry about the other part that you have out there with Treasury. So you get 25% return. Think about that: 25% return with an absolute slam dunk guaranteed return on your principal, no matter what happens. Man,
Yeah, that's a very smart risk management
yeah,
strategy.
it's a technique, and I put it together, and I used to sell it to the Arabs all the time. Because the Arabs don't deal in interest because of their morality.
Mhm.
Their religion doesn't do interest. So yeah, we call them proper participation, proper principal guaranteed proper participation notes.
Gotcha.
Okay, and we sold them offshore. So anyway, that's my sorry. Thank you all for listening to this long story.
No, but I mean, so thank you for that insight. Um, one of the things that CPIN, prides itself on is curating investment opportunities. And so, we provide that that evaluation of due diligence, as well as the structures that we use. We manage those structures. And so we definitely believe that one of the best risk management tools is managing the actual deal, right? And so um, now when it comes to the information about a company, how you have more readily available information for a public company than a private company, 100% true. But it's getting those that have access to the private companies and are able to get the information, get the edge. And that's why when you look at these venture capitalist funds and these private equity funds, right, their returns over time consistently beat the public markets. Um, and um, and yes, when you're if you're an angel investor, for example, you have huge risk, but you also have huge um, returns on that risk. As long as you have an understanding that you might invest in 10 companies and nine of them fail, but you get one home run, which offsets the other nine losses, right? So it's about risk management, it's about portfolio management, it's about money management. And so, you know, and understanding the risk and understanding what your personal risk level is. And so that's why one of the courses that is required to become a sophisticated investor under us is how to evaluate an investment opportunity. And it's all about understanding risk and the different types of risk. Um, so, um, but now uh, I do want to talk about AI companies because they're the hottest thing out here since sliced bread. Um, the AI industry is what's holding up the economy. It's what's holding up the Nasdaq and the S&P, um, and it's where all of the private equity and venture capital is running to, is investing in AI related companies. And for those private companies that are getting ready to go public this year, and I'm gonna name, the top three. We've got SpaceX, OpenAI, and Anthropic. SpaceX is probably going to be close to a $2 trillion valuation. OpenAI will probably be over a trillion by the time that it does its IPO. And at the rate that Anthropic is going, it's going to catch OpenAI and also be um, worth $1 trillion. Um, Interesting story. So, part of the AI craze is the ability to do vibe coding, where a person that has no coding experience is able to create apps simply by um, doing the right prompts to a vibe coding app. And they have different levels of vibe coders. And Cursor is an app that um, is um, is very popular among coders because it helps coders and it 10x's their productivity. So you guys remember the company FTX? and Sam, I forget his name, but he went to jail. Um, and FTX collapsed in, what was it, 2022? And the it went into receivership, and the receiver started selling off assets, trying to recoup the money that had been lost. Well, FTX had invested $200,000. Um, well, there's actually probably less than that, but they invested some money into Cursor. Yes, Sam Friedman was the head of FTX who went to jail. And so FTX had invested in a company called Cursor. And if you heard in the news, Cursor entered into a deal with SpaceX to where SpaceX has a $10 billion deal with them and the option to buy Cursor for $60 billion. The receiver of FTX sold off the Cursor investment for $200,000 in 2023. That $200,000 investment would be worth $3 billion today. So I'll say that again. The receiver sold off the investment in Cursor in 2023, just 3 years ago, for $200,000. And that specific investment is now worth $3 billion. So imagine being the one who bought that position, that Cursor position for $200,000, and now you've turned it into a $3 billion position, right? That's the power of private investments. That's why these angel investors and these venture capitalists are all dying to get in to these early deals of get into these private AI companies. Go ahead, Tim.
So years ago, one of the best investment things I ever did and was involved with is called debtor in possession financing, DIP financing. It's the sweet bread of all deals. And you can find it out by going out there and looking for all these companies that are going bankrupt, whether it's real estate, whatever it is, when they file that Chapter 11, start looking at that situation, because if you can come in there and buy a creditor's position out, that's work. But here's what we would do. The company was trying to reorganize. They don't have any money. Ain't no bank going to loan them any money nine times out of 10. So if we go
Mhm.
ahead and give them some money, whatever that amount is, now we take a priority as debtor in possession. We take priority over everything that exists to get our money back. So there was a company here in Atlanta called QoS. It was a software company, and it was really good. It dealt with online type stuff, and it was really good, a security company. But it went under because they had some problems, and but they needed some money to pay their lawyers and to pay something else, and it was like $30,000 was all that was needed. And so I knew three guys and say, hey man, y'all got $30,000 you're gonna throw in on this company? And we did. We put $30,000 in, and we tied up $25 million. So my part was only as an advisor, and so I knew how much I was gonna get. When we came down to the bankruptcy court and we did our deal, we did it financing, and the company went completely under. But the cash that was in the company from the sale of everything, we not only got our 30,000 back, but we got 300,000 back. You see, and that was for that, because that was the deal we got, right? That we could structure for these guys. Hey, we got
Right.
big risk, blah blah blah. Debtor in possession financing, DIP. Take a look at that, because you're secure by all the assets. You're ahead of every creditor in the whole doggone thing. We even had I'll never forget. We were sitting up there with the bankruptcy judge, and one of the creditors. Why should they get so much money? They came in at the end. Blah blah blah. The judge said that's the way it is. They have priority, and so and then and my two guys that went in with me, they were trying to get a bigger taste than I was trying to get. And the judge said, no, no, Mr. Holly has the priority over everybody in here. So he looked at the lawyer and said, cut him a check today. I walked out. I didn't even expect it. I walked out of there with a check that afternoon. And so debtor in possession financing is a great strategy. And if we use it, you don't have that risk. And you don't have to worry about it. And you can find out about it because it's all companies that file bankruptcy are made publicly known.
Right. Amen. Thanks for, again, another great risk management and investment strategy. Um, so you've got these three big companies that are planning to go public this year. And I had a CPN member who's an investor through CPN uh, ask me, Mike, how can I get access to some OpenAI shares before they go IPO? I said, um, man, that's tough because you've got to be on the in crowd and you've got to be associated with these companies that got in early. Um, and um, you may be able, if you get in with a company that currently owns shares, they may be willing to sell some shares now, though that's not likely because they're looking at how much money that they're going to make. So it's tough. Then I got an email today about a new fund. It's a public venture capital fund that anyone can buy shares in, um, and you don't have to be accredited. You don't have to be sophisticated. Um, it's not on an exchange. They're only doing direct sales, headed up by a very credible venture capital firm. Um, and here's the amazing part is they are selling um, their shares for as little as $500. And so this is, the opportunity and this fund is invested in multiple industries, but specifically in AI. Um, they have access to OpenAI shares. I think they may even have access to SpaceX shares. Um, but this is unheard of because of what the presentation I just went through, right? Is the gatekeepers. But one of the venture capitalist firms broke away from the pack, created a public fund, and they're selling access to regular people. Now, if you want to hear the details and what CPIN is offering its members, because we're going to give access at a fraction of that $500 because of the way that we structure our deals and we create special purpose vehicles and we fractionalize and then we create the SPV that invests on behalf of the group. We're going to make it to where you're able to invest through the SPV for as little as $50. But if you want to know all the details, you got to become a member of CPIN. I will be sending out an email shortly, and we'll be doing a special presentation for CPIN members only about this extremely unique opportunity. Hey, if you've got the $500, I'll give you the information of how you can invest directly. If you don't have the $500, I'll give you the information of how you can invest indirectly for as little as $50. Um, but this is one of those unique opportunities that doesn't come around too often, where you're able to get a slice of these well-off private companies that are going to be going public soon. So I will land the plane there. Does anyone have any other questions or comments?
Yes, I have a quick question.
Yeah, go ahead.
First of all, I'm waiting for the email, first of all. Uh, the second thing is that you mentioned the AI craze companies, SpaceX, OpenAI, and what was the third one?
Anthropic.
Spell that for me.
Anthropic.
I see.
Yeah,
Anthropic. Okay. Okay. Thanks a lot.
yeah, you're welcome. Um, so if you're not a member, join. If you're watching this recording later, um, go to the CPI.network, become a member, and um, now the ultimate catch is to invest for that small amount of $50. You got to be accredited or a sophisticated investor, which means if you're an unaccredited investor, you've got to go through the educational courses. It's 3 courses. It takes less than an hour to complete. And then you just got to pass the test with a 70 percent. And then you're able to see the details. This is a new investment. It's already up on the investment section. So um, Leroy, you can go into the members only section and you can look at investment number 8, um, and you can see all the details about this new opportunity. But I will be sending out an email for everyone to come to a special discussion about this because I think it's extremely exciting. I just learned about it today, and I wanted people to take advantage of it. With that, I thank you for spending an hour with us. And this has been Let's Talk About It, where every other week we come together and we talk about a topic that affects the Black community economically. And our goal to help support the Black community to become self sufficient, self reliant, and self determinant. Stay blessed and stay safe. Bye bye.
Take care. Be safe.